Good morning, Stackers. How will the Federal Reserve's rate cut, or not, coming in the next 24 hours affect the prices of silver, gold, Bitcoin, crypto, etc. in the short term and also in the longer term as well? Let's take a look at the charts with me, Joe Main, and we'll be speaking to two experts on the subject as well, Ricky from Perth Bullion Exchange and Bisher from stormrake.com. Here's a quick look at silver on the... We're looking at the 4-hour time frame price in USD, $41.90 US cents. Had a little bit of a sell-off. Could this be the selling the news? Okay, buy the rumor, sell the news. Around about this kind of time, it's not that surprising that, before the Fed meeting, which happens in around about 24 hours time roughly, that you might see a little bit of this kind of action here. And we have been speaking about some bearish divergence playing out on the 4-hour just recently. Some kind of momentum loss. We've had a really great run recently. You can see very clearly the fiat dollar action, dirty fiat dollar price action has been going higher, but the relative strength index has not been matching it. It's been in divergence. That's a bearish divergence. And we just broke through that $42 area right there. So we're in a bearish change of market structure, at least on the 4-hour time frame. How long that lasts, I don't know. But that's where we're sitting with silver. If we take a look at gold as well, it's done a similar thing. It's actually done a bit of double bearish divergence just for the short term, at least. Again, that's the 4-hour time frame, where you can see we were talking about it back here. You had a higher high, a flattening out right there, and then just in the last 24 hours roughly, you had that move up to $3,700 US, a brand new all-time high for gold. But then that was a lower high on the relative strength index as well. We might be seeing a larger sell-off there. Who knows? Let's talk to the experts. Let's chat with Ricky from Perth Bullion Exchange. Joining me now is Ricky from Perth Bullion Exchange, perthbullion.com.au. Mate, I want to get your take on the upcoming Fed rate decision. We kind of have a good feeling of what's going to happen, although technically we don't. Let me know, what are your thoughts? Are they going to lower interest rates? How much do you think? And more specifically, what do you think that does to the price of gold and silver in particular, in the very beginning of that announcement, and then a little bit further on down the track? Thanks for joining us.
Yeah, Joe, thanks for having me back, first of all. But it's interesting times. Obviously, the metals have sort of bucked the trend in heading up in a high interest rate environment. So now we're sort of hoping that as we start to see these cuts roll through, we'll obviously see a big gain in the metals. I've got a few thoughts about the rate cut decision and what that might lead to. I think there's a bit of risk in both directions, because I feel like the gains we've seen over the last sort of couple of weeks have been the pricing in of that rate cut. And I think for me, it's more about whether they cut by a quarter or a half, because I think some people are probably pricing in this half cut. So I think if we see a cut by a quarter, we might see, and I don't think it makes any difference to the long term, because I think once they start the cutting cycle, we've started the cutting cycle. So I think long term it's good for metals. But I think in the hours after, or the few days after, if we see a 0.25% rate cut, that might actually signal a bit of a downturn in the metals, because I think some people might be pricing in a half basis point at this point. And likewise, if we see a half, we could see a big upshot in the metals, because I think a lot of people are pricing in quarter. So I think there's a bit of both of those happening. I think the completely out of left field is if Jerome Powell wants to dig his heels in and not cut. That would be pretty outrageous at this point, I think.
It would be. What do you think what percentage do you give that? Is that your 5, 10, 20%, or where do you sit on the no rate cut thing?
I think it's a possibility. I don't think it's zero is more the point. Like, it might be 5%, it might be 2%, but I don't think it's zero. And I think that it's hard to say now, because if you look at the Japanese and how the interest rates have affected their markets, higher interest rates are negative for them because the government owns most of the debt. So does it mean good or bad things for the economy in the US that they're cutting rates, or keeping rates high? Does it make the US dollar stronger to have a higher rate, or does it make it weaker because the government's paying more for their debt and they're obviously so indebted at this point? So I think a lot of the traditional metrics for that sort of currency strength tied to interest rates are a bit broken in the current climate because the governments are so indebted that higher interest rates might be weaker for the US dollar, whereas people might see a big rate cut for the US, meaning that their balance sheet's going to look a hell of a lot better because their interest rates on their own debt are going to come down. They can refinance their debt at a lower interest rate. So, typically you'd see an interest rate cut would weaken the US dollar and things like gold would skyrocket. But does it work the same way anymore? I think the system's a bit broken. And I'm not sure, I'm not an expert. And I think there's a lot of moving parts that come into like what it actually does, like definitively to any of the markets. I think anyone's guess sometimes.
Agreed. I didn't even think about the potential really of a 0.5%. So not 0.25%, but 50 basis points. I didn't really consider that.
Well, I hadn't until the jobs revision came in, and obviously the worst one in history. And then you sort of go, well, the US they've got a dual mandate. They've held off for so long now, and they were probably wrong to hold off as long as they did. Now that the job starters come in and been reviewed down, does that mean now that they try and play catch up and go, well, we should have done this 2 months ago by these jobs numbers? Do we need to now throw the kitchen sink at it?
It would
I
feel
think
like
I actually think it's probably maybe a 20 or 25% likelihood that they go for the bigger cut.
right. I would. The thing that I would go no chance on that is just the Powell. Like, would
Yeah,
he be seething of having to go, to 5. I feel like 0.25 is like, yeah, okay, all right, guys. I reckon 5
yeah.
would
I
be
think
like,
that's the same reason why I believe there's a small possibility that they hold rates, because obviously the relationship there. I don't know if you watched that interview when they were touring. What are they building? A new building over there, and they were touring together. It was the most awkward interaction I'd ever seen between two humans.
yeah,
The relationship's obviously terrible. So,
yeah.
does he, start making decisions on the back of how much it punishes Trump is a
Mm,
possibility.
mm. And look, most people believe that this isn't a one and done kind of situation. I mean, I presume you think the same. So you believe that once they've done this once, I mean, they're going to have to do it the next time, probably the time after that. How long do you think that can, go on for?
Well, I think, even like the jobs market's not going to fix itself after one cut either. So, like, even if it was going to fix it after one cut, there's a lag on these things. So, if they cut tomorrow, then they might see a change in jobs data in 2 or 3 months, but it doesn't, like, they're not going to ride that out and go, oh, we're not doing anything else until the next batch of data comes in if it's as bad as what the previous ones have been. So I think once they once that genie's out of the bottle, they'll have to sort of make a move, and probably downward.
How long?
The
How
only
long do
thing
you
I've
reckon? So go ahead.
the thing I find interesting is, like, the inflation is not, like, so the US is actually cutting. If they cut, they're cutting before the inflation's in their target range, which is not typically what they do.
Mm,
And if, as everyone knows, inflation sort of comes in waves historically. So do they now cut into inflation, and then that's the only possibility I think that might put the brakes on sequential rate cuts is, do they cut and then go, oh, the inflation is continuing to travel high because it has upticked. Does it continue to uptick? And then, in a month, 2 months' time, they're looking at inflation going, it's way over our target range. Can we actually cut? And, like, that's their dual mandate. Like, if inflation's traveling upwards, but the jobs data keeps coming in negatively, like, what do? That, like,
mm,
they're painting themselves into a corner, and they have been doing for 10 years or more,
mm,
and now they're sort of running out of space.
mm. Do you think potentially it's little priced in at the moment? We've actually seen silver, particularly silver, just in the last couple of hours, actually just have a little bit of a downtick on the hourly time frame. Do you feel like that's a reaction to buy the rumor, sell the news as such? It's maybe whatever less than around about 24 hours, I think, until the decision. Do you think it's a little bit profit taking ahead of the case?
Yeah, I think people probably just trying to position themselves prior to, like, they're probably weighing it up, and everybody's got their own theory on
Mm.
which way it'll go and what it'll do to the markets. And I don't think anyone really knows. We see people in store who are, you know, will come in and talk about it and then go, oh, I think, we might see a little downtick in gold after the cut. So I'm, offloading a small portion that I might buy back next week.
Really?
But yeah, we've had a
Wow.
couple of people, and each their own. People make
Yeah.
their own decisions about
Mm.
what they think it's going to do, and
Mm.
but yeah, there's definitely both sides of the coin. People trying to get in before and add a few ounces, and people, I suppose, who've got a lot who go, well, okay, if it does take a dip, I'd rather take a bit of profit now prior to that announcement. So I think the market movements are probably just bigger players doing the same thing as what you, me, and anyone else would be doing, and making sure if you're planning to buy ounces this month and you think this is going to send it skyrocketing, then you go in and you buy them today before it happens. So
Yeah. True. I do. For me, I mean, again, I've worked in three major bullion dealers over, the last 12, 13 years. And every now and then I did have a customer playing kind of like, almost like day trading as such. Like that thing. It's like, yeah, I think, this decision I'm going to buy back next week. And I always wonder with the physical, it's like, it's like because of the physical, I've got to go down to the store. I've got to do this and that. I think that's a little bit of a dangerous game, just in case. On the other side of it, though, I can recognize that, yeah, these people might have. That's just not the only gold in their bag, if you
yeah,
know what I mean. It is like, just a little bit of, here's my 10 ounces of gold, but the little do you know, they've got like, a whole, buried box somewhere. So I can see both sides of it. Obviously, being a bullion dealer, not financial advice and all that kind of stuff. Let's do the quick silver gold longer term thing. What are we talking
yeah. I mean,
next? What
I
are we
think
talking next
it's.
year?
I think next year, well, if we work on US terms for the sake of simplicity, I think next year in US terms, like 4,500 is not silly. I don't think. Like, I'm not saying, if I always try to be a little bit more conservative, so I lean towards that 4,000 mark. But I don't think 4.5 would be silly, nor 5,000. I think some of the big players are already calling those sorts of numbers, and they're
Mm.
usually late to the party. So
Yeah, right.
yeah, I
And
think. I mean, for me, with buying now, like, I often tell people to dollar cost average and stuff like that. But I think there's good opportunities. Like, personally, I added some ounces in silver only a couple of hours ago on the dip.
oh,
I
yeah,
think it
right.
came back about 0.6, 0.7%, and I added a few ounces. And I always, obviously for what we do, you're continually monitoring the prices. So whenever I see it, like, a good dip like that, I'll often add a few ounces. And I think it's dollar cost averaging, but I'll take advantage of small price dips to sort of add some for myself.
Now, when
And I
you're
think that works.
sorry, go ahead.
Oh, I think that works. Like,
Mm.
it's still dollar cost averaging, but if you're buying a dip, yeah, sometimes it'll dip a little lower, but often you'll get a 30, 40 dip, 30, 40 cent discount on what the last 3, 4 days have been.
Mm. When you're, as a bullion dealer, when you're going, I'm dipping in and adding a few more ounces to my stack, are you just, you're buying your unallocated on the website? Are you just doing it through, a little hedging kind of thing? Or are you actually going, no, you go into the vault, of which I've been privileged to actually see, former Commonwealth Bank, I think it was, over there at Perth Bullion Exchange. So it's a big vault. And you literally are going, I bought that. Oh, I haven't got one of those. I haven't got one of those. How are you adding ounces as such as a bullion dealer?
Often when I'm looking at the dips, I will buy, you know, uh, paper silver. Like, and like, I don't recommend it to most people, but that's normally when I'm, having a little speculation. Like, if I'm buying a little dip, it's easy to get in, get out. Like you say, trading the physical with premiums and things like that.
Mm,
It's very hard to recover that in
mm,
a shorter time frame.
yeah.
So, and then I'll slowly move those. Like, I'll buy a paper contract on a dip and hold that for 3, 4 weeks, and then convert that across and this into a physical product. when something comes in that sort of fits what I'm after, and then you just sort of take the spread on the profit.
Fair enough. Mate, I appreciate your thoughts on all of this. Any final words in terms of what you think people need to be aware of, at least for the next 24 hours, roughly? The next 24 hours, maybe 48 hours, the day before and the day after the Fed rate decision. Any words of wisdom?
Yeah, I just think it's mostly with these things that, you're bound to get some volatility, and it's just keeping a cool head and, sticking to your guns. If you planned on buying and holding, then hold. Like if you see it, like if you bought some additional ounces in the lead up, first of all, you shouldn't be buying more than what you can afford, or, if you've got bills to pay or things to pay for, that you might need that money back, you shouldn't be buying precious metals with it. But, likewise, if you see a $70 or an $80 drop, there's no need to panic. The trend is in one direction at the moment, and I think like if you hold it long enough, you'll see returns on that metal. Just about keeping a cool head. Either way, whether it ratchets up, you shouldn't be then trying to catch that spaceship as it's heading upward either, because as you probably know, you obviously follow the markets. The big gains, often you'll see a trace back of 50% of the gain, and if you're trying to catch it on the way up and you buy the peak, you could have waited a day and bought the metal $10-$20 an ounce cheaper.
Yep, correct. I mean, it's just like we'll talk the nasty word crypto for a second. I just saw a crypto that I kind of look at, and it just got listed on one of those large exchanges, and then the price of it's just gone doot, 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 doot. And in my head I went, oh, should I? And then the good guy on the shoulder went, dude, just chill, because it's that news event. You know what I mean? So I agree. Don't chase the big candles, mate. I agree, and thanks so much for joining us today, mate. And of course, everyone can go to Perth Bullion Exchange, perthbullion.com.au, when they're ready to buy physical precious metals with free shipping when you have 20 or more items in your shopping cart. Ricky, thanks for joining us again.
Thanks, Joe.
All right, heading on over to digital assets. Let's take a look at Bitcoin on the 4-hour time frame as well. 116,660 US dollars. It hasn't fully played out or as much played out a bearish divergence, but it's looking likely at this stage on Bitcoin as well. Again, like with silver and gold, might be just selling the news at the moment. People just taking a little bit of profit off the table before they see what happens with Jerome Powell and the Fed meeting in the next 24 hours roughly. But what you can see here is a higher high on the fiat dollar price and a lower high on the relative strength index. And when we zoom out a little bit as well, what you can see is we're at the top end of the zag zone on Bitcoin as well. So from this high and this low, this is the zag zone, or the expected resistance range. Okay. And I said on the live show just the other day, in order to be ultimately confident that we're going to see higher prices, just in the next, week or so, something like that, I need to see it clear and hold that 117,500 area, because it is the 0.618 Fibonacci level from this major high and this major low. We're in that zone here, and because of that bearish divergence, could we potentially see a tick over back down into maybe a test of that previous resistance level at around about $113,000 area? If we do break down below there, you might see some lower prices coming than that, but let's see what happens. And let's talk now to the expert about the upcoming Fed decision and what he think it might do for the price of Bitcoin and crypto. Let's have a chat with Bisher from Stormrake. Joining us now is Bisher from Stormrake, stormrake.com, your full-service cryptocurrency brokerage. Great to have you back on the show, Bisher. Tell us, what are your thoughts on the upcoming Fed rate decision? How do you think it goes? Do you think it's priced in? Tell me what you think is going on in terms of Bitcoin and the crypto side of things.
Joe, thanks for having me back on. It's always a pleasure and a privilege to be able to be side by side with yourself. And what better time to be doing it in the macro Olympics with all the traders. Everybody's super bullish right now. I mean, my view, and the view that we have here at Stormrake and across the desk, is that this is potentially one of the most bullish setups that we've had in recent macro in recent history. Okay, reason being, gold at all-time highs continues to melt up. Silver at all-time highs continues to melt up. Stock market at all-time highs continuing to melt up. the labor market and the labor force is showing some weakness, which gives the Fed a complete green light to go out and cut interest rates in the face of higher inflation in order to stimulate the economy. So they've got at least a reason within their dual mandate to go out and drop interest rates. Recently, Jerome Powell at Jackson Hole, the symposium there in Wyoming, came out and said that they're going to remove the reference rate towards the 2% inflation target, or no longer be focusing on that and moving towards a more data-driven model. However, they've shown that the data that they're relying on is inaccurate because they've had one of the largest revisions in the job market in history. 911,000 jobs just mysteriously vanished, no longer exist. So with that said, I do think that we're going to see 25 bips rate cut. I think some people are entertaining 50 bips. I don't think that's realistic. Not going to happen. That would just completely break the US dollar market and send gold, silver, Bitcoin equities into complete melt-up mode. The Fed wouldn't give us such an easy, long layup. They're not going to make it easy for us bulls. So I think 25 bips is coming through. That 25 bips come through, anticipate some short-term volatility. It could be even realistic for Bitcoin to hit 112, 113,000, which was the previous resistance level. We're trading at currently just shy of 117,000. What will happen is there's about $500 million worth of long order liquidations that would get hunted at 113K, and there's also $500 million worth of short order liquidations that get hunted at 119. So I wouldn't be ruling out the fact that we see 113 get taken out before we make a beeline towards 119 and print new all-time highs before the end of the month. So some short-term volatility. So for those who are trying to buy some value, 112, 113 is the pocket that I anticipate us to revisit prior to heading up towards new all-time highs before the end of the month.
Interesting. Now, I do agree that there will be some volatility here as well. It sounds like it's, buy the rumor, sell the news kind of thing where it's currently been priced in already, I'd say. And if I know anything about crypto, which, look, you've been in crypto a long time, I've been in crypto since 2013, it particularly loves to grab people's stop losses. So again, you've got that resistance level there, and it's basically, if you're right, if there's a whole bunch of liquidations there, people have bought above that resistance there, about that 112, 113, they've set their stop loss just a little bit lower, because they don't want to take a huge loss. What does crypto love to do? Thank you, grab that nice thank you, and then heading hopefully onwards and upwards from there. It is very interesting. We had that chat, a couple of months ago, and we spoke, and I asked you, give me your Bitcoin top for, 2025, etc. You told me $200,000 potentially Bitcoin in 2025. I'd love to hear your opinion on where you sit with that at the moment. That'd be lovely.
Absolutely. I mean, look, for me, Bitcoin at $200,000 does not change. I'm calling 150 within the next 3 months. Most likely it'll play catch up because gold and silver have massively outperformed Bitcoin this year, as they should. I love the monetary metals. I'm not going to talk anybody out of them, but gold and silver up over 40% year to date, whilst Bitcoin is only up 20% year to date. I say only, anybody would be happy with the 20% return, but us crypto bros and Bitcoiners, we expect more from the corn. So we're anticipating a big catch-up move in Bitcoin to catch up to the precious metals. What that would mean is that Bitcoin would be easily being priced between 180 and 220K within the next 6 months. If it was to have a comparative move towards where gold and silver have moved this year, it would put Bitcoin at 150K. I think that's realistic within the next 4 to 6 weeks if I was to be ultra bullish, but I'm giving myself 3 months in order to give myself some breathing room within that forecast at least. And then I would say 200K within 6 to 12 months of 150 being reached is more than doable. I remain relentlessly bullish on this. I think that we're going to see one of the largest melt-ups in equities and risk assets in recent history. Right.
And what are you basing that huge melt up on? What's like the main crux of that, do you think?
Cutting interest rates in the face of high inflation. That's really what it comes down to. Gold and silver are telling us what's going to happen.
Do you think that it's not just one and done in terms of the, interest rate cut. We're all expecting it. I presume it's like 99% sure that's going to be happening, tomorrow when it's announced. What about the following meeting and the one after that? Do you think it's basically a steady little doot, 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 doot for a little bit?
Yeah, we're entering into a global easing cycle because in 2022, 2023, we went through a global tightening cycle, was one of the fastest rate hikes in recent history globally, not just in the US and the Federal Reserve here in the RBA. In Australia, we had that happen as well, happened in the Bank of Japan, happened in the Bank of England. It was a complete unified tightening of the global purse strings. Now what we're going to be entering into is a structural global loosening of policy, and that's going to end up because on the fiscal side, you got to look at the government. They cannot afford interest rates where they are now. They're rolling over on maturing on a bunch of debt that must be refinanced at lower levels, at lower interest rate levels, in order for governments around the world to remain solvent and continue to operate. And that's, the king mama jamma is the United States sitting on $38 trillion of national debt and $1 trillion of interest expense that must come in at a lower rate in order for them to continue to operate.
I wonder then after that how long that can continue for. Do you have a feeling that, this could be, an easing, a money printing, money printer go kind of thing for 6 months, 12 months, 2 years? How long do you think they can keep just, ratcheting down until they've got to start tightening up again?
It's really hard to say. I'm trading this quarter to quarter. It's melt up now, fear later. That's what I'm telling my brokers and my traders on the desk. Right now, we're about to enter into what is the golden period of markets where bulls are aggressively rewarded. The old Texas hedge, get long on spot and then get long again with leverage, right? Not financial advice. That's just what a Texas hedge is, right?
Sure.
So in terms of what I'm seeing here, it's whilst it could be occurring for 3 months, 6 months, a year, it's hard to say definitively how long this will occur for. Once the Fed signals otherwise, then obviously we will have to change our tune accordingly. But I think that this is not going to be it's kicking the can down the road, right? You've got to think that this has occurred from, from Nixon's days, right? In the 1960s. They've been on this war path of printing more and more currencies, engaging in plenty of geopolitical disputes in order to be able to ratchet up the war machine, which gives a more of a comfortable reason to print currency. Every single global financial crisis or issue in financial markets has been papered over with larger and larger printing of the press. And that's what is covered in Lawrence Leopold's The Big Print, right? And I've been going through that book, and that's formed a lot of my macro view over the last few years, and also I guess for the few years ahead, is that we're going to enter one of the biggest periods of currency printing known to mankind. And that will be the death of the US dollar. I'm not saying it'll be like an overnight, 99% debasement, US dollar disappears. All of a sudden, Bitcoin is at $10 trillion, gold's at $10,000, whatever, right? I just think that we're not, people, I keep reminding them they're not bullish enough on what is about to come through the pipeline, because we're entering into one of the most structurally bullish periods you can be in. You cannot have the stock market at all-time highs, gold and silver at all-time highs, Bitcoin near all-time highs, jobs starting to disappear from non-farm payrolls. What's ending up going to happen is they're going to cut interest rates. Markets are going to realize, people are going to realize, shit, I can't hold my funds in a commercial bank account anymore. I'm going to get killed if I just try to do that in the face of record high inflation. Asset holders of all descriptions are going to do well. Real estate is going to do well. Equities is going to do well. Precious metals are going to do well. Commodities in general will do well. Cryptocurrencies are going to do well.
Wow.
All of them are going to do incredibly well. Right now is the time to be long and strong on anything but the US dollar.
Man, I could not agree more about the US dollar. And I see your point there about basically, there'll be a point where people, and enough people, the masses believe I can't have dollars in my bank account because, I get my paycheck one week and then 2 months later, it's buying me less and less. They're basically being forced into gold, silver, Bitcoin, equities, etc. It's like, where else are you going to put your money? It's not like, and they're certainly not going to stuff their cash under a mattress as
No.
well. So I absolutely agree with that. Something you mentioned before was you spoke about your traders there at Stormrake. Now, of course, you're one of the brokers there at Stormrake, and anyone can give you a call or send you an email, etc., and you help them purchase cryptocurrencies as a full service one, and of course you charge your fees, etc. But you did speak about your traders, and I had the amazing Daniel jump on my live show yesterday, and he was typing in the live chat there a couple of his favorite altcoins as well. He was talking, for example, one of his favorites at the moment is Aero. He loves Doge at the moment. He thinks they have a really good chance in an altcoin season run. We've spoken about your favorites before. Have those changed? Your top 5, top 10? Have you added in any into your little favorite bag at the moment, or are they all the same?
All the same. I mean, the one thing I've always advocated for my clients is have very concentrated positions, right? Reason why I don't want to spread my clients too thin across a variety of different altcoins. Let's say, I think we talked about it on the last time I was on your show, was that if you buy 10 coins for $1,000 each, and you've got a $10,000 investment, if one of them has a 10x, great, you've now made $10,000, right? You're not going to write home about it, but it's a nice little windfall for you.
Yeah.
Let's say you have concentrated positioning and you research really well a handful of few projects. Let's say you invest $10,000 into one project that only does a 3x, which is a less of a return than the one that you've done a 10x on by a considerable factor, right? You've now made $30,000, right? So you don't need to chase massive multiples. You just need to have high conviction, concentrated positioning.
Yes.
So my portfolio hasn't changed that much. It's still layer ones and ISOs. Of the layer ones that I focus on, Ethereum, Solana, Hyperliquid, Sonic. That's what I'm bullish on. In terms of the ISO tokens, we're talking XRP, XLM, HBAR, and Algorand. We talked about that last time as well.
We did.
I'm not going to be going outside of those, because for me, I want to be able to have super concentrated positions that even if I only get a 2, 3, 4x return, I'm still printing on a nominal basis.
Well, thanks again, Bisher, for joining us here today. Love always getting your take on what's going on with the world and in Bitcoin and crypto in particular. And of course, stormrake.com, full service cryptocurrency brokerage. You handle, Australia, of course, the US, the UK, New Zealand, other selected countries as well. And what I love about Stormrake is not only is it for the crypto beginner, because being a full service cryptocurrency, people can just call you like your old school stockbroker back in the day.
That's
it's
right.
Just, hey, Bisher, I want $10,000 Bitcoin. And you go, handled it, no problem. You just go away and sit down and, sit on the beach in Hawaii and whatever. I love the fact, though, that you guys have very deep liquidity. So even for the crypto native who's been around in crypto for a very long time, they can also go to you as well, because if they want to buy a lot in one go, or particularly when they are the crypto millionaires, gajillionaires, whatever you want to call it, and they want to get out quickly as well, I think having access to deep liquidity with stormrake.com, I think, is a great idea. So I love what you guys are doing there. And I'll put a link somewhere, of course, to my referral link to sign up with stormrake.com, because you get it for a 2% brokerage fee for the life of the account. I think that's it, my friend. Any final words from you?
No, I just really appreciated being on the show again. It's always a pleasure to be able to be sitting across yourself, talking macro, talking markets. This is what I love doing, and I appreciate you having me on.
Beauty, mate. All right, take care, and we'll speak to you next time. Well, there you have it. 2 experts' opinions. I want to know your opinion now. Pop a comment below. Let me know, do you think there will be a rate cut? If so, how much it will be? And I want to know what your thoughts are on how silver and gold will react to that, and how Bitcoin and crypto will react to that as well in the short term, in the 24 hours roughly after the Fed rate decision, and ongoing as well. Would love to hear your opinion. Let me know. Of course, let's do a final synchronized slurp. Grab your tasty beverage. I've got mine. Let's slurp it synchronously together. Ready? 3, 2, 1, go. I go live on Tuesdays and on Thursdays. You'll get another live show tomorrow. Make sure you join me then. Hit the big red subscribe button to join the GMS family with me, Joe Main. Stay safe, stay informed, keep stacking whatever you're stacking, and I'll see you soon.